You need to stop leaving money on the table. Here are the year end tax moves for real estate investors. Welcome to Be a Better Landlord. I'm Ashley Kerr. Today, we're going to be talking about tax preparation before the year ends. I don't want you scrambling after 2025 is already over and trying to figure out how to reduce your tax burden when the year has already passed by. There are a couple things that you can do after the year has ended, such as do a cost segregation study, or you can still contribute to your IRA for a certain period of time, but most money moves for tax benefits need to be made before the end of the year. So, tax planning is crucial before you hit that January 1st date. And this gives you time to actually reduce your tax burden by doing some planning ahead of time. This is one thing I did not take serious or even see as a benefit as a rookie real estate investor. I did not take this serious at first, and I paid way too much in taxes. There was one time where I got an email from my accountant saying, "You are getting a refund." And I was like, "Oh my God, this is amazing. I have never ever gotten a refund ever." And then she emails me about 2 minutes later and says, "I am so sorry. That was for another client. You owe $30,000." I about cried. Actually, I did cry. I called my mom. I was so upset and so distraught that I had this huge tax bill. And that was the breaking point for me where I decided I needed to take taxes and tax planning more serious and not just say, "Oh, well, this is what I owe." Real estate investors have such a benefit, such an advantage to build wealth and to reduce their tax burden. I was really, really focused on just having, my cash flow. I was really focused on what I could get out of the properties and how much income I could make, but I wasn't focused on how much money I could actually keep back in my pocket by reducing my tax burden. So, today I want to go over a couple things that you should be doing before the year end. The first one is cleaning up your books. Make sure your accounting, your bookkeeping is accurate and not messy. Make sure that you have a clean profit and loss statement. If you have an LLC or some kind of company, that you have an accurate balance sheet. So, when you pay your mortgage payment, most of the time it includes interest, it includes your mortgage principal, it includes your insurance, it includes your property taxes all in that payment. Your property taxes, your insurance, and your interest are all expenses that you should be writing off. So make sure that you're including those, but not your principal payment. And equally splitting those up in your books is going to make it so much easier at year end to actually write those things off. Okay. So making sure you have kept all of your receipts. You can use accounting software like TurboTenant has the REI Hub. With that software, you can easily integrate anytime somebody pays rent, it's automatically being recorded for you and just taking a step out of what you need to do. So there's lots of automations to reduce the manual work that you actually need to do as a landlord. So keeping clean books just gets easier and easier every single day. I don't want you to be the landlord that shows up with the shoebox of receipts to your accountants and says, "Okay, here's all my receipts. I'm ready to file my taxes." So clean books. The second thing is to identify every write off. So, yes, we talked about insurance, property taxes, maybe some repairs and maintenance. You have your Lowe's receipts, your contractor invoices. But there's other expenses that you can write off too, such as the mileage that you spend going to and from a property. There's also phone, internet, or home office. If you're using an office in your house, you're able to write off a percentage of your property that you have your home office in, including a percentage of the utilities, things like that. So, talk to your CPA if you do have a home office to operate your rentals, and you can write some of that off. The next thing is if you attended any kind of conference, meetup, mastermind, any kind of real estate event, you can write that off also and reduce your tax burden by that being an expense because that is continuing education for you as a landlord, as a real estate investor. Also, the travel. So, if you're traveling to tour properties, to close on a property, If you're traveling to an event like BPCon or some other real estate conference, then you can write that off on your taxes too. Make sure you keep all of your receipts and make sure you stay within travel guidelines, such as you can't go to the conference one day and then stay a whole nother week and vacation and then call that all a write off. So make sure you talk to your CPA again as to what actually constitutes business travel and can be written off. Then the next thing, just make sure you're not forgetting your softwares and your tools, such as your TurboTenant subscription, such as any other kind of tools or resources. Like I love to use like Doc Hub to actually implement into my business. I don't like to use a printer, so I am doing anything I can to fill out a form online, and I use different software for that too. So just make sure all these little subscriptions that you need for your business that you're being able to write them off to. As you're going through your expenses, look at the repairs and maintenance and make sure you are properly separating capital improvements and also your repairs because they are not the same and can't be grouped together. So, for example, if I have a roof repair where it just maybe a couple shingles needed to be replaced and it's a $300 invoice, or if I replace a whole roof on a property and it's a $3,000 invoice, I can fill out a form so that I don't pay sales tax on that. And that constitutes as a capital improvement because it's adding value to the property over time. So that is something that is depreciated, where the repairs and maintenance is just written off in that year and you're most likely paying sales tax on it. Right now, we have the big beautiful bill, which is bringing back 100% bonus depreciation. So, your capital improvements, a lot of them, you'll still be able to write off 100% of them in that first year. So, this is why having a great CPA, especially one that is real estate specific, can help you plan as to what's the best way to take advantage of the legal tax strategies that you can actually use. The next thing is retirement and entity strategy. So, with your properties, what is actually the exit plan? What's the goal of these? Is it to accumulate wealth? Is it to scale up, do a 1031 exchange into a 40 unit apartment complex? So, as you're thinking about your tax strategy, you also need to think about long term. What's the goal? Do you need to do any kind of estate planning? Do you need to review your entity setup and make sure that you're getting the best tax benefit out of it? Then you also need to look at if you qualify for real estate professional status. So, this is a cool little tax advantage tax strategy that's available to real estate investors. If you there's a couple like rules like you have to spend more time working in your real estate than you do anything else. You have to spend at least 750 hours for the year, all these different things, but then you can write off your passive losses on your tax return against your active income. So, if you're married and your spouse has a high income earning W 2 job, and maybe you're a stay at home mom or work part time, but you are full time working in the real estate, you're meeting that criteria, managing the tenants, taking care of everything, doing the bookkeeping, and you qualify, you can take any passive losses, which a lot of times are from the depreciation and not actual cash losses, then you can write that off against the active income. There's also the short term rental loophole where you don't have to qualify for that. If you are managing and operating a short term rental, you can take those losses and write it off of the active income without qualifying for the real estate professional status. So, if any of these intrigue you and sounds like maybe this would benefit you, make sure you reach out to your CPA to find out more. Before we wrap up here, I want you to go through a couple things that you need to do throughout the year going forward. So, the first one is schedule monthly bookkeeping check ins. So, whether you have someone else doing it or even if you're doing it yourself, go through detail of where everything is being expensed, making sure you didn't miss an expense, make sure you're doing your bank reconciliations. And then you need to have some kind of organization, especially when January comes, you're getting hit with so many tax documents that you'll need for 1099s, 1098s, escrow balances. If you did any 1099 work, all of this needs to be grouped into one area. So I like to use Google Drive. You can use any cloud system. You could use a filing cabinet if you wanted to, but make sure you have a place to keep all of this in order, including your receipts too. Then I like to keep a rolling tax list for each entity. These are the items that I need every single year to actually prepare my tax return, which basically means sending the information to my CPA. So, some of the things on this list are a balance sheet for the entity, a profit and loss statement from the entity, my final mortgage statement showing what my mortgage balances were, how much I paid in interest, any 1099s I received, and any capital improvements I did on the property. You can just create this list and go through. So every year you don't have to think about it and you know exactly where it is because it's saved into your organization, your filing system. And you can just go and pull each piece of information and send it off to your CPA. So many people are focused on the cash flow, like I admitted in the beginning, and they're not as concerned about the money you can actually keep in your pocket. You may be trying to get the cheapest insurance policy, trying to get the cheapest contractor so you can keep money in your pocket, but tax advantages are one of the best strategies to actually keep money in your pocket as a real estate investor. If you need help staying organized as a landlord, make sure to check out TurboTenant for resources to help you actually have accurate bookkeeping and to keep your own money in your own pocket. Thank you for joining me on Be a Better Landlord. I'm Ashley Kerr, and I'll see you next time.